especially when it comes to those rate-sensitive sectors, right? I mean, Bell just mentioned those tech stocks in Korea. How positive are you that we might see more downside to come, given, of course, that we are not getting any signs that the Fed might go the other direction in terms of rate cuts?
Yeah, I think the market in general has been a little bit too sanguine year to date in terms of the prospect of an imminent Fed pivot, and not just the kind of end of rate hikes, but also aggressive rate cuts in the second half of this year. That's priced into the rates markets, but certainly doesn't seem to be reflected in equities, and not so much the deep cyclicals in Korea per se, but definitely a lot of the long duration, hyper growth, software, retail meme type of stocks in the US have popped up a lot. And we think that's not necessarily justified. We don't necessarily think there's going to be a 50 basis point rate hike at this next Fed meeting, but we do think that the expectations for a lot of cuts in the second half of this year are probably overdone. Inflation is going to be stickier than expected, especially on the services front.
So are you finding any bargains across Asia right now?
Well, I think in Asia, there's a couple of areas that are quite interesting, right? One is clearly still, China has pulled back on the back of the global retreat in the last couple of weeks. We think that's still an interesting area because even though it's going to be not a linear line to the economic recovery story, but nonetheless, the base is so low that sequentially we're definitely going to see improvements. And there's going to be more and more policy support as well if those improvements don't come through fairly quickly. So we think that's one area that's kind of, buy on dips or continue to build into the rest of the year. Positioning still very, very low, and valuations are very low as well, especially offshore. I think in the rest of Asia, we also like parts of the deep tech cyclicals that are not necessarily long duration, but a lot of the tech subsectors have come back down a lot in terms of ASP, in terms of earnings expectations, and some for valuations as well. So for example, DRAM, NAND, memory, and so on and so forth is probably at the bottom of the cycle, although it still remains to be seen when they pop back up. But we're flexible investors and we have patience, so areas like that would be quite interesting to us as well. And finally, I think in terms of interest rate sensitive sectors you mentioned earlier, we do think that China financials and Japan financials are still interesting, just because they're the very, very rare sectors or areas in the world where interest rates are coming off a relatively low basis and going to keep going up over the coming years, and valuation is very cheap and positioning is very light as well.